Welcome back. I'm Pratap here. Today is 18th October 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you please click on the tab post. Some of you might be seeing the tab community. So click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training videos are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So in the video description, please find the Telegram link and please join in the Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday we identified 5 high liquidity zones and we got 2 very good trades and 1 trade narrowly we missed. Otherwise that could have been a very big profit we would have got otherwise. So let us discuss them. The first one is Bajaj Auto Limited. This is a daily high liquidity zone, drop, 3 base candles and a rally candle identified by our software. See how sharply Bajaj Auto has been fallen down, but now all of a sudden our high liquidity zone stopped the fall. That is the magic of the high liquidity zones we've been observing for the last 1 year. Okay, this is a daily high liquidity zone. We fine-tuned with 75 minutes time frame. Let me explain how I fine-tuned these zones. See here you have a ERC candle, failed ERC candle as a rally candle, as a leg-in. You have 1, 2, 3, 4 base candles and again a rally candle with a hidden gap. So this is a hidden zone. And you may think this is also a rally, 1, 2, 3, 4 base candles and rally. Can't we draw a zone that way? You may get a doubt. But see here, this candle is a very big candle. Again it is a drop. This is a large candle. Again rally, another large candle. Of course this is a very highly explosive leg out candle. But this is also a leg out candle. Between both these candles, if you want to use this as a leg in, there is no base candle in between. That's why this area is not a good area. This is a rally, base rally. This is the right area where you may find your order flow. Okay, now let us identify our order flow in the next time frame, 15 minutes time frame. Let us look for a 15 minutes fine-tuned zone inside the fine-tuned 75 minutes zone. See, this is the 75 minutes zone. At this 75 minutes zone, we have a overlapped zone. 2 zones, drop, base, rally, and a little above again at the proximal line there is again a overlap, drop, 3 base candles and a rally. But when you plan, you can plan your plan adjusted with this level. This is the 75 minutes proximal. At that 75 minutes proximal, you can plan your trade. That way you can adjust the risk. This is what we've been doing several times. If the risk is small, you can plan exactly. You need not adjust the risk. If the risk is big, then only. But at the time of adjustment, we have a risk. The risk is there are sometimes we might be missing the trade. Just before reaching this 75 minutes proximal, prices may start moving above. That risk will be there. But the accepted risk, your risk means the kind of the potential amount you would like to lose if there is anything wrong in our analysis. That risk you have to manage within 2% level as per the concepts you learn in our training program. Anyway, this is the 15 minute zone, drop, 3 base candles and rally. This is another 15 minutes zone, drop base rally, drop base rally. So we have two order flows are there within the 75-minute zone. One is overlapped at the proximal line. Okay, now let's go to the 5 minutes time frame. In the 5 minutes, see here we have a drop, base and rally, and this is currently acting as a high liquidity zone. The price is tested and pushed the prices up, and again tested, again once again it pushed the prices up, again tested, once again it pushed the prices up. Multiple tests we have seen. Not only that, the most important characteristic at high liquidity zones, a new zones will be created, LOTL zone. See, again drop base rally is created, again drop base rally is created. But last time it picked up the order exactly at this proximal line. And not only that, here you see you have a drop base rally is also there. This is also LOTL zone. That means this is the real high liquidity area, strictly speaking. From this high liquidity zone, drop base rally is created. So that is the reason why what I did, I adjusted the risk up to this proximal line, 75 minutes proximal line. Like this I have adjusted. Exactly this is our plan. And our stop loss is at this LOTL, the bottom one. Now this risk we can easily manage. See, earlier exactly from here it picked up the orders and moved up, because this is the high liquidity area. So this is the way you can plan another trade. Previously we got 3 successful trades, and today also we got 1 successful trade, but only thing is this time prices went deep inside. Next time planning a trade in this zone is risky. Of course, institutions may add a new order flow, we don't know. But based on this price action, it is a risky planning a trade next time. But this time already it gave a profit. See here, we got the trade at morning. This is a 9:25 minutes candle. 9:25, even 9:30 candle, it came down and started moving up and finally reached the 15 minutes target. What is the 15 minutes target? Here we have a drop, 2 base candles and a drop candle with a pro gap. But actually this pro gap orders has been consumed and reached. But this is okay, this is high liquidity zone's point of view, it reached the target. But practically our trade point of view, do we really wait in this pro gap area? There is a higher risk. Sometimes pro gap again push the prices down. This time this zone might be violated. That way we might be missing our trade, or our trade will be stopped out. That's why many people what they do, they exit at this pro gap. Okay, up to our target we got 7.6 ROI we got, the actual target. The original target is 15 minutes target. But practical target is depending on the situation in the live market, you will be changing your targets. That is practical. But this is theoretical. Theoretical is achieved today. That is our high liquidity zone strategy point of view. The actual target has been achieved. We are happy with that. Okay, fine. But practically you may not dare to wait up till this 15 minutes area. You want to exit a little before because there is a pro gap. Because there is a pro gap where the gap is started, maybe that way, or where the gap is filled earlier till that way, either one you take. So let us assume this is the where the gap is ended, not started, I'm sorry. The gap is ended. After that some more gap is filled. So many people till the gap is ended, or maybe where the gap is filled, till that they keep the target. See, even till the gap is filled area, you got 1:5.49% ROI you got. Okay, some of you might say, See, I didn't adjust the risk. I have taken the earlier, the 5 minutes entry point of view. First LOTL zone, there I have taken. Still you get the trade, 1:3 RR. See here. But till the filled area you got. Till the filled area. I think I have drawn extra. The 5 minutes time frame. I have took 15 minutes entry. Sorry, now we have to take 5 minutes entry, not 15 minutes entry. Your 5 minutes entry could have been this one. This is the one. Exactly here. Sorry for my mistake. So entry is a little below here. This is our entry. Still you got 1:3.65 RR we got, where the gap is filled. Where the, where the actual gap is ended here. Even there also you got 1:3.3 RR you got. Why I am telling all these points, whatever the way you planned, Bajaj Auto is a very successful trade today. Whether you fine-tune the zone, whether you minimized the risk, or whether you don't minimize the risk, but target till the practical target is still. See, this is our theoretical target. Up to here is our theoretical target. Okay, we have achieved theoretical target. That is very good for our high liquidity zone theory point of view. But practical point of view, where exit, where the gap started, still you have sufficient RR is there. 1:3 RR is there. Even if you don't minimize the risk. If you minimize the risk, your trade would have been here. This is where the actual 75-minute zone is proximal line. This is the 75-minute zone proximal. If you would have taken a trade at 75 minutes proximal, you got 1:6.8 RR even till this gap area. Your target is still gap area. But your actual 15-minute zone, you got 1:8 RR, you got 1:8.5 RR, you got. So that's why it is excellent. But I am calculating the whether the maximum. Always I calculate the maximum RR. Maximum reward, whatever is achieved during the market. That is just for our performance evaluation of the high liquidity zones. Because it achieved the maximum means not up to here. The maximum within the analysis point of view. The minimum is the practical point of view. That's why I always tell, either you get the maximum profit or less profit in your actual trades, not beyond the maximum profit. Sometimes if you use a trailing stop loss, you get beyond that actual profit also you will get. Beyond the maximum also you will get. When you use a trailing stop loss. Sometimes. Okay, anyway, what is the profit we got? Remember, all of you please remember, I am telling you again, several times earlier I told you, these are not my profits. These are not my trades. These are the opportunities given by our high liquidity zone strategy. That's why every day we are checking our high liquidity zone strategy, the 80% are we achieving or not. The average 6% average ROA, how much we are achieving. That way we are comparing every time. That means currently I am testing how much profits they are giving in the live practical stocks. This is not the historic data testing. Last 1 year, live market in the practical market, how our HLQ zone strategy is working, we've been testing last 1 year. In the live market. That's why this data is a stable data. Because some of you are believing every time it is happening. Previously also Q&A sessions. That's why always I tell you people complete Q&A videos. Without completing the videos, some of you people are wasting my time asking same questions again and again. In the Q&A videos, I told you I don't have any interest to talk about my trades. First of all, I cannot do anybody. We cannot discuss our trades with the outside people. There are few practical reasons for that. Unnecessary issues we face later on. If it is a closed group, that is a different story. But this is an open group. So maybe, I don't know, with knowing these points you are asking these questions. Without knowing you are asking these questions, I am not understanding. This is the strategy you have to use and you have to get the profit. Some of you are saying, okay, but you are commenting, okay, by seeing my trades you will get confidence. How you will get confidence by seeing my trades? You will get confidence by learning the subject. That's why always I am telling the people, you need to build the skills. You need to practice good by doing paper trading. Without doing all these things, you can't gain the confidence. How you will become an independent trader? Not by seeing me or by seeing the other people, you won't become an independent trader. By building the right skills, you will become an independent trader. By practicing a lot, you will become an independent trader. And by seeing the reality, you get confidence. By seeing the reality. How we are fine-tuning? The way how I am fine-tuning, you will also fine-tune the same. There is no magic here. You clearly learn in lesson 16 how to fine-tune the zones. Maybe initial stage you may make few mistakes. Once you know those mistakes, later on slowly you will overcome those mistakes. That is only experience. Experience you won't get all of a sudden. By practicing, that's why I am telling you people do some paper trading first. Once you build the confidence, then you will be slowly you need to invest your money. Once you build good confidence, then you can your full whatever the investment the money you reserve, that full amount you can invest and you confidently you can do the trading. And it is not a magical thing, right? It is a continuous process. Some of our members are already doing for the last 6-7 months. Today in a confident way they are doing their trading. Once you get the confidence, fear will go away from your mind. You won't get confidence by seeing my trades, by seeing the other person's trades or some other person's trades. By building good knowledge only you will get the confidence. By gaining the knowledge. Without completing the courses, without properly learning, without properly practicing. How do you get? Why I am showing you these analysis videos every time clearly? Several times I told there are two reasons. Reason number one, I want to know how our NeoStock software is performing. I want public to focus on that. That is my publicity point of view. The analysis, these videos I am making. Otherwise, I have a lot of, I am a busy guy. I don't have much time to focus every day on analysis things. Still I am spending because I want to promote this, our NeoStock software. I am looking for a big customer who can buy my software. And the second reason is for the people who are learning these concepts to build their confidence. Because they fine tune the zones. And then they will verify. Many of the people what they are doing, the moment I show you the high liquidity zone, first you are drawing the zone, then you pause the video, you will fine tune the zone, and then you will check exactly the way how I fine tuned, whether you are also able to do or not. Fine tuning the zone, you don't require any special talent. Already you learned the concept in lesson 16. Without making mistakes, are you doing or not? That is only you need to check. After practicing some 15 or 20 days or maybe 1 month or maybe maximum 2 months, you will get 100% confidence. The day you realize you are also fine tuning the zones exactly the same way how I am fine tuning. We don't require any special talent. Only the concepts learned in lesson 16. Sometimes you get confusion at this understanding these failed ERC candles. Slowly that is also you will build that knowledge, because every time I am telling you when I am using failed ERC candles as a legging, when there is a gap, hidden zones. Already explained those concepts in lesson 9.3 and 9.4 videos. But still you need some time to practice such kind of hidden zones. Slowly you will also get confidence. and slowly you will also be started marking the zones exactly the way how I am marking. We don't require any special skill for fine tuning the zone, because already you learned in lesson 16 those concepts. From one time frame to another time frame, how we need to move. Within the already higher time frame zone, we marked within that zone how again further we can find the fine tuned zone. If you know how to draw a demand zone, how to draw a supply zone, that is easy to find the zone. There is no special skill is required in that. So that is the reason why focus on the subject. Don't focus on the other people. Looking into the other people, you get curiosity about others, but not about yourself. I want you should practice. The moment I shown you higher time frame zone, pause the video, mark that zone, and immediately, if you are not a premium member, you may not be knowing what is that high liquidity zone. The moment I start open that stock, you know the leg in and leg out dates. Immediately you mark. Pause the video. Practice. Practice means you fine tune. Then again continue the video and check whether you are exactly doing the same way. If you did not do, understand what kind of mistakes you are making. Because I am not showing you only the zones that got the trades right. I am also showing you that those that are not got the trades also I am telling you how to fine tune the zones. Why I am telling you? Because I want you people to learn. Hope you got the clarity. So Bajaj Finance has given 16,511 rupees profit, which is 11.8% ROA it has given. I calculated from here to till the target zone because it is achieved. If it would not have reached the practical target, I would have calculated. Assume from this gap area prices were started falling that. After that it didn't reach the actual target. Then I would have calculated till the practical calculated. See, what is that I am expecting? Minimum 1:3 RR should come from our high liquidity zone. If it achieved minimum 1:3, I consider that as a success. If it did not achieve, I will consider that as a failure. But not every time. Sometimes new target will be created before 1:3 RR, maybe 1:2 RR. A new target is created after you took the trade. At the time, we have to exit there only. At the time only, I consider that is only the exit criteria because they are the dynamic targets. Dynamic targets you achieve only during the live market. How do you identify these dynamic targets? Once you learn the subject, our supply demand zone, every time in the live market, you see a new 15-minute zone is created in the live market. Now immediately the one you marked earlier in our analysis, that will be changed to the new target. Already you took the trade. But till the new target, you will not achieve 1:3 RR. You got only 1:2.2 RR. No, there is no other option for you. You have to accept only 1:2 RR and you need to exit the trade because already you took the trade. At that time, our HLQ zone strategy is also telling because you are taking all these decisions based on the HLQ zone strategy. A new target, so you need to exit. And ultimately, whatever the target is there, till the target, what is the profit we are calculating. See, today it reached the target. Till this target, the profit is 16,511. But you might have exited at this gap area. If that is the case, your profit could have been maybe only 12,000 rupees instead of 16,000 rupees. Maybe your ROA could be instead of 11.8%, your ROA could be only 9% ROA today. Those who exited at this gap area, where the gap is started or where the gap is filled till that area. See, this is the candle. Maybe 11:20 candle, you might have exited. Till this candle, probably your profit could have been maybe 12,000 rupees instead of 16,000 rupees. That is our practical scenario. Why you took that decision? Because many times you have seen till the gap area prices came down. But why I am considering? Because the actual target is achieved. The actual initial target is achieved. That's why I am considering to check the performance of our high liquidity zone. Because here I want to assess the strength of the high liquidity zones. It is not my strength or your strength I am assessing. People should understand this point. That's why this could be your maximum profit. If anybody did not take, you are having patience that, okay, today you are having confidence that at any point of time, today it will achieve, today it is a bullish day. That way, if you think, if you would have waited, maybe you would have achieved this much. Maybe you would have got 16,511 rupees profit. Though it is not a practical scenario, still you would have got. Who knows? Hope you are all understanding what I am trying to tell you. For me, the importance is not about my trades or not about your trades. For me, the importance is how these HLQ zones are performing. That is what we are doing for the last 1 year. Every day we are testing the performance. That's why I am telling you the name. What is the name I am telling you in the beginning of the video? This is the performance evaluation. Every video for the last 1 year I am telling you. This is the performance evaluation of high liquidity zones. Clearly, I am mentioning this point. My interest is about the performance of these HLQ zones, not about my trades or your trades. I don't care about that. I have to care more about my software. That is my main objective. But what is your objective? You should be an independent trader. That should be your objective. Many people forget this point while learning these courses. How you will become a good trader in the future if you don't keep this point in your mind. A good trader never think about the other people. A good trader always think about himself, his skills, his future. And more importantly, always thinks about how I can become an independent trader. That is the point will be there in his mind. If you are a good trader, if you want to become a good trader, how I should be an independent trader, what kind of work I have to do. That's why I provided you training instructions in our Telegram channel. I kept that message in the pinned messages so that anybody can access that old message. Look into the pinned message. Then you will understand how you will become an independent trader. Hope you got the clarity. Otherwise, why we should learn so many lessons, nearly 25 lessons, 66 or 67 videos are there. And that too around 40 hours time you need to spend. Close to 40 or 50 hours time. I also spent that much. I didn't that much spend only for speaking with you guys during the videos. But preparation I spend even 3 or 4 times more than that. For 1 hour video, I have to prepare several hours of time. Few times I took 2 days, 3 days, 4 days time for preparing one presentation. They are not dummy presentations, right? They are interactive presentations. Added animations into the presentations. Shown you the movement of the candle by candle. That way I gave you explanation so that the subject will exactly reach into your minds. For doing such kind of preparation, several days time I need to spend. But are you spending your time with that seriousness? No. Some of you are spending seriously. Some of you are having light what others are doing, what is happening in the others things. That is what you are focusing. If you focus like that, do you become a good trader? You never be a good trader. Focus about you. Focus on yourself. Focus on your practice. Focus on your virtual trading. That is paper trading. If you do like that, you will become a good trader. Now already in our forum there are good traders are there. Do they look into my trades or do they look into the other people's trades? No. Why I am seriously talking about all these points? Because the focus is shifting to something else for you people. I mean some of you people. When your focus is shifting to something else, how do you become a good trader? Every day clearly you are seeing HLQ zone analysis, how we are fine tuning the zones, exactly the fine tuned areas, the prices are started moving up. Only less than 20% scenarios we are seeing stopped out trades. Are you not understanding its seriousness? You have to understand its seriousness. See Bajaj Finance, see the daily zone, how sharply it is fallen down. But why today all of a sudden price moved up? Because our software already listed this zone, drop-based rally. Earlier also there are drop-based rallies here. See, drop-based rally. Sorry, not drop, rally-based rally. Here rally-based rally is there. Why these zones did not work out? Why only this zone is worked out? Because it is a high liquidity zones, they may not be the high liquidity zones. See yesterday's price action, no zones within this candle level were stopped the prices. But today, why yesterday prices further, why it did not move down? That is the magic. The magic is our high liquidity zone has done. And such kind of magic is recognized by our software. I am not listing every high liquidity zone, right? The high liquidity zones are near to the zone. The near to the zone, a special algorithm is there for calculation of what is the near. It is not based on the percentages I am calculating. Yesterday's volatility I calculated, how the volatility worked, how the volatility yesterday's, what kind of stocks, the volatility actually controlled the price movement. All these things are there in the algorithm, especially finding the stocks near demand and supply zones. In that algorithm, if the stocks are passes, especially the high liquidity zones, passes those algorithm, those high liquidity zones only we are taking the trades. Yesterday also price, it could have further moved down and it could have been violated this zone. That didn't happen. Because this high liquidity zone is having a real institutional order flow. At least 80% of such kind of zones our software is identifying. And see today in the fine-tuned area it started moving up. Maybe today prices went deep inside the fine-tuned area. But at least we got a successful trade today. Next time again this zone may work or may not work. The reason is institutions may add a new order flow, it will work. If they does not add, probably next time it will be violated. We cannot give any guarantee. But as long as high liquidity zones, they are providing you trade opportunities, you can. Because this is a 5 minutes high liquidity zone, which is inside the daily high liquidity zone. And moreover, the 5 minutes high liquidity zone is a fine-tuned zone. All these factors are giving a big advantage for us, and today see the movement. If you look into the 5 minutes, we exactly understand even much better way how it moved out today. Focus on these points. Don't focus on unnecessarily small things and waste our time. It is not only wasting your time, you are also wasting my time. Unnecessarily, I am responding to all such kind of questions which are not useful at all. In the comment box, please keep some meaningful questions so that it will be useful to you and also it will also give satisfaction to me. Okay, now let's move on to the next zone. We got another good trade in LTF. And also you will understand stop buffers, how it helped today. How powerful these stop buffer concepts are. And this is a 75 minutes high liquidity zone. L&T Finance. So this is a drop and a 1, 2, 3, 4 base candles and a drop candle. This is what our software identified, this 75 minutes high liquidity zone. And this one I fine tuned with 15 minutes time frame. Here I identified a lagging candle, a rally candle. Failed ERC is looking like a rally, moving up prices. The dynamic view rally. And these are the 3 base candles and then a drop candle. This is with the hidden body. You may think if you don't look into the hidden body, you think it is a base candle. But the moment you add the hidden body, this is going to be a leg out candle, a drop candle. So rally base drop. In lesson 9.3, lesson 9.4 concepts properly you learned, and at least if you would have listened some of my earlier HLQ zone analysis videos, clearly you would have recognized this zone. No magic is required here. A clear indication. And many of our premium video members are drawing zones exactly like this. So rally based drop. This is the 15-minute zone. This 15-minute zone is again fine-tuned with 5 minutes time frame. This one I didn't draw because this is a ERC candle, this is a drop candle, in between no base candles are there. That's why I ignored this. But this is a clear leg-in candle and 3 base and drop candle. Excuse me. Next, fine-tuned. This is 15 minutes fine-tuned zone. Next I am moving to 5 minutes time frame. So within the 5 minutes time frame, you see, you have a drop candle, you have a base candle, again you have a drop candle. What is this blue color line? This is our stop buffer. It is having 0.15 stop buffer is there. Look into the LTF stop buffer in our yesterday's video. At the last 1 minute or 2 minutes in the video, I am publishing the stop buffers every day. Slightly pierced. This zone is slightly pierced, and then sharply it was started moving down, moving down. But here the real challenge is, you have a very important learning here. Here the real challenging is finding the zone. Where to exit? I am sure many of you might have exited here. Let me draw a horizontal line. Why you have to exit there? Because that is the practical scenario. Drawing this zone like this is a theoretical, but the theoretical level it reached. So that way our HLQ zone analysis. But this is not the 15-minute zone, this is the 5-minute zone. Why we have to draw this zone? I will give you the explanation. That is only your learning, that is only your experience. You have to listen such kind of explanations. But before that, where most of you might have exited, let me draw a blue color horizontal line. Most of you might have exited here. Or a little below, here, maybe somewhere here. Why prices are coming here, started moving up, coming here, started moving up, coming here, started moving, coming here, started moving, again coming here, started moving. Finally, after a long fight, finally this level is broken and then came down. Why at this level? Because at this level you have maybe a drop to base. Actually, this is not really a base candle. I am not convinced. This is a ERC candle and rally candle. This is a failed ERC candle. But still, if you draw a zone, probably this is the area holding the prices. Maybe 1 minute level you may find some zone at this blue color area. So this is the 1 minute area acting as a high liquidity zone. See, this could be your failed ERC candle, or still if you want to consider this is lagging, that is also okay. It doesn't make much difference. You have rally, 3 base candles and a rally. See, this is the first test. This is the second test, and again moved up, again third test, or fourth test, or fifth test, sixth, seventh, eighth, ninth, several times. Again here, see, after that price moved up and again came down, again price moved up, again came down. So definitely what happens? What is the psychology of a trader? This is what, these are the things affects the psychology of a trader. Because the psychological factors are affecting, you may not wait till the prices are reaching this level. Definitely at some point of time, you lose your patience. Your mind will be setting, okay, book the profit, book the profit, book the profit, book the profit. At some point of time, that particular mind, whatever it is controlling you, you get into that mind's control, and somewhere here you book the profit. If not here, here. If not here, here you book the profit. And the person who booked the profit in this candle, imagine his mindset after booking the profit. After waiting so much, he booked the profit, exited the trade. Even though you got a good profit, still he will be thinking, okay, see, now it is violated and finally reached here. I would have missed this trade opportunity. Unnecessarily I booked here. And you will be started blaming yourself. But you forgot that you already got a good profit. See, all these are all psychological factors. That will be affecting you, or that will be affecting even me also. I am not a god to control all my emotions. I will also think like you. I am also a trader. It is a common psychology. Why we will be thinking we have to book profit, book profit, book profit? Why we will be thinking? Because the time is moving. When time is moving, your money is struck in this trade. If you book the profit somewhere here, probably you might have used this investment in some other stock. That is the way our mind will be influencing us. Sometimes after reaching here also you may not get another trade opportunity. At that time you will be started thinking, why unnecessarily I booked the profit here? Maybe I would have waited. Maybe another 1 hour, 2 hours I waited, I would have got more profit. This is the way always we blame ourselves. If you want to become a good trader, once you exit, don't think about the trade at all. Whatever is happening, you have to forget. Unnecessarily going back and changing our mind and disturbing ourselves, slowly things will overcome. One by one you will get control, and after few months or after 1 or 2 years, you will be truly working like a true professional. At least 80% level, you control your mind. Okay, why I book? This is actually a 5-minute zone. See here, rally, base, rally. This zone controlled the prices. Of course, it is slightly pierced, but even then, the movement started from here only. Even though it is pierced zone, still the actual movement started from here. Even though it went a little below and moved up. That means in this area, there is a strong order flow that again pushed up. How I recognized this zone? This is the question you should get in your mind. First of all, where is the actual 15-minute zone? See, there is no 15-minute zones are here. Even at some extent you can draw. This is not a base candle. Maybe this is a ERC candle. Even then, sometimes you compromise and you can draw the zone, some 15-minute zone. And within this area, you can fine tune any 5-minute zones. So there is a fine tune drop, base, rally is there. That way what you do, here you will fine tune this zone and you plan your trade. This is the actual target, 15 minutes target. The 15-minute zone, some compromise and drawn, but this is our actual 15-minute actual target. But why we didn't plan our trade till this? The reason is achieving this level may not be very, very easy. Because so much. Already prices moved. That much falling, this much also is not easy. And moreover, entire day the stock is struck up here. First of all, how I recognized this could be the target instead of this. The reason is, I already told you, this level, the candle is not clear, 15 minutes candle. Second thing is, even if you compromise, it is not very near. It's not very near to this our entry point of view. It may reach here, may not reach, but definitely this zone. How can I say this zone? First let me delete. How I identified that zone? I don't know how many of you remember, if you look into important analysis and strategies videos, we have a playlist, important strategies and analysis. Several times I shown you the playlist. You go to NeoStock homepage, click on the link playlist. In the playlist, you will find one playlist, important videos and strategies. All the important videos I explained earlier. Suppose if this video is an important video, what I do? Immediately I will add this video into that playlist. Today's video is an important video. Many important points I talked. Especially people who are not properly concentrating, I talked about them. Everybody must listen. The future, whoever is again, learning, the new students who are learning these concepts. Second thing, this important strategy also, which already I covered earlier, again, second time I am repeating that concept in this video. So that's why I feel this video is important. I will move this video into important strategies and analysis videos. What I expect all the people who after completing our course, I want them to first focus on important videos and analysis videos. They should go through all the videos. Some of you people already completed all those videos. In that video, I explained one new supply demand zone strategy. There is a new supply demand zone. I think some of you might have already remembered that concept the moment I said. What is that? I told you, between two leggings, the higher wick and the lower wick of the leggings, there could be a very strong order flow will be available. Not 100%, at least 70 to 80% scenarios, very strong order flows institutions will keep. That's why some people developed a new supply demand zone strategy. They won't follow any leg in, leg out. They won't follow any of those rules. Proximal line, distal line, whatever you land, such kind of rules they don't follow. A simple strategy, supply demand zone strategy they call it as. Our supply zone strategy name is institutional balance imbalances, supply demand zones. What is imbalance? What is balance? I already explained in lesson 2. But some people, what they do, they draw zones. There won't be any base candles. There won't be any leg in, leg out concepts. Very simple. Two leg out candles are there. Generally, we don't call leg out candles. We call them as a rally candles. Two rally candles, large candles. Not medium sized candles or not failed ERC candles. Two candles whose body is more than 75%. And they should not be medium sized candles. They should be large candles. When you find two such kind of large candles, the higher wick of the candle and the lower wick of the candle, you can draw a zone. Let me draw a zone. See here? This is the way they draw the zone. And they feel within this area there is a strong order flow. So here also you see, higher wick and lower wick, they draw the zones like this. This is the way they draw the zones. Here they don't draw. Actually we draw rally, base, rally. Anyway, this is a medium sized candle, it looks like. Or maybe it is a failed ERC candle, whatever it is, by looking into this. So these candles we don't consider. Only two candles, large candle, another large candle, another large candle. That way they draw the zones. See here, I repeat again. In case if you have any confusion, I repeat again. The higher wick of the candle, you can first let me draw horizontal line. This is the higher wick of the candle. Let me draw another horizontal line. This is the lower wick of the candle. And this is the zone for them. Once the prices reach, they take the trade. They keep some stop buffers. Many times what happens, these zones will not be violated. Many times. See, today it is slightly pierced. So it is violated. Many times prices reach here and they will be started moving up. This is another theory of a supply demand zone price action. And this price action is purely based on two consecutive rally candles or drop candles. You can draw between two rally candles or you can draw between two drop candles. That is the way they draw. But what I told you, the reason behind this is, within this order flow, if you go one time frame below, according to our supply demand zone price action, you may see a zone in the lower time frame. This is currently 15 minutes time frame. We have drawn this zone 15 minutes time frame. So instead of blue colors, let me draw according to our zone. Let's draw the zone according to our zone theory. So within this area, this was as per the new theory, higher wick of this rally candle and the lower wick of this rally candle. Now exactly in this area you can find our zone at one time frame lower. This is a 15 minutes chart. Let's go to the 5 minutes time frame. Now you see you have a rally, base and rally. So prices reached here and then again started moved up, but before that it is slightly pierced. There could be other reasons for this. So this is the reason why I have chosen this as our target. You may ask a question, why not going below further and keeping the target? Because if they are falling up to this much, probably it may give you maybe 12% or 13% ROA. That is not practically possible, especially during the last 2.5 hours of our trading session. See, when we got the entry at 12 o'clock 30 minutes. 3:30, another 3 hours market will be closed. Getting last 3 hours of the market, getting 15% ROI is not practical. So that's why there should be some kind of trade-off. So this is the reason why I have selected this. But as per our human emotions, probably this zone will be playing the role. Because a lot of time prices are struck up. Probably here some people might be exit from the trade. So we have to accept that. So how much profit L&T has given up to this zone? Because I am calculating up to this area, because for me, how much profit I got or how much profit you got, that is not important. For me, the important thing is our high liquidity zone strategy. Without any emotions, how much opportunity it has provided, that is important. Because that shows the power of our high liquidity zones. So that way, logically, this is the entry point and logically, this is the exit point. That way I am calculating. But in between, human emotions might play important role, and they might be forcing you exit the trade. Those things I can't bring into the picture while calculating the performance of the high liquidity zones. That's why, as I told you earlier, the name of this video session is performance evaluation of the high liquidity zones. Every video, what I am telling you, these are not the, every video I am telling, these are the performance evaluation of the high liquidity zones. I am not talking about these are my trades or somebody's trades. So you have to focus on these points. Okay, L&T has given, L&T Finance has given a profit 10,664, that is 4.5% ROA. Until this zone, probably if you would have exited here, maybe you might have got maybe around 6,000 or 6,500, or maybe around that you would have got the profit. Maybe you would have achieved a 3% or 3.5% ROA you would have achieved. Okay. This is about L&T Finance. And another important trade we missed is Laurus Labs. This is a 75 minutes high liquidity demand zone. First, let me delete this and I will tell you. Actually, this is our planned trade. We have a rally, base, rally. This is what our software identified. And when I want to fine tune in the 15 minutes time frame, the candle structures are not good. We have a drop, 1, 2, 3, 4, 5, 6, 7 base candles and then rally. So that's why I'm not comfortable with 15 minutes. Initially I thought this zone will be violated, but later on in my analysis I have seen, when I go to the 5 minutes time frame, here I have seen this drop, base, rally. This is the leg-in, drop, base, rally. This is the lower time frame zone as an horizon to this entire high liquidity zone. See, high liquidity zone is formed by picking up the orders from this 5 minute zone, and then prices were started moving up. You already learned in lesson 22. Lower time frame zone as an horizon to the higher time frame zone. See, just narrowly we missed. Even if you add the some entry buffer, still you will be missing this trade with some around 55 paisa or 60 paisa margin. You will be missing. That is shortage still. So entry buffer is not good enough to get this trade. But why it moved so sharp? The reason is here I have seen one 5 minute zone. Maybe this could be the reason. See here. drop base rally. Probably this could be the reason behind, probably this 5-minute zone is also having strong order flow. That's why it just reached the zone and started moving up. See how much move it has given. See, this is around 461 rupees and it reached up to 481 rupees, 20 rupees profit. Probably you would have got around maybe 18% and 20% ROI you would have got based on one futures margin cost. Definitely you would have got not less than 15% ROI from here to here. Such a huge move, but we missed it. And to consider this 5-minute zone as an aggressive trade, I didn't get any price action clues. The only thing I need to check whether this is a high liquidity zone or not, I need to check. I need to take NeoStock software help and I need to check, but I didn't look into that. I didn't get time. But if otherwise, we don't have any other. See, all these candles are moving, part of this rally. Rally means the general English word. Prices are rallying, right? Moving up, moving up, moving up. The prices are moving up and then came down and then from here again they are started moving up. If that is the case, definitely I would have considered this is an aggressive trade because prices came up to here and then started moving up. See, all these rejections are not price action clues to consider this is a aggressive trade setup because all these rejections are part of this rally movement because during the intraday price movements will be there. When we consider a price action clue, prices are moving up and then again they reversed and they came near, even up to here also I would have considered. Let me draw a line. Even up to here also I would have considered. If they are moving, come up to this blue color line and then started moving up, I would have considered this is an aggressive trade setup. But this movement is not part of reversing the prices. This is part of the rally itself. Rally, price movement will be there. Based on this, we cannot consider the aggressive trade setup. If you consider many zones will be violated and you get so many losses, maybe today's scenario, you would have got a profit. But many times you get many losses. The price reversal should happen and come near to this, somewhere here, up to somewhere here. And then if they would have moved up, we would have considered this zone is having a strong order flow. That way we would have planned an aggressive trade. But today we didn't have any price action clue. That's why we didn't plan. Now you may ask a question, can we consider this is an aggressive trade next time because prices did exactly just before the zone they started moving up. Can we consider next time? We can consider if this is a fine-tuned zone because a fine-tuned zone type 2 proximal generally we allow, but this is an aggressive trade setup. Draw wick to wick. Now clearly you can see this zone is tested. See, this zone is tested. Type 2 just narrowly missed the entry, but actually it is a tested zone and it is not a fine-tuned zone, and considering next time might be quite risky. But you can do one thing. This is the way you have drawn type 2 proximal, right? If really next time if you want to take a trade in this zone, maybe you have fears that there is a strong order flow by seeing this rejection and movement, you may think this is the area strong order flow is there. Next time this order flow does not allow prices to enter into the lower time frame LTF zone as an horizon to higher time frame. That way next time also we will miss the trade. If you feel like that, what you can do, next time you can combine both these zones. If the risk is within your accepted limit, you can plan the trade. If the risk is not within your accepted, till this, the bottom 5-minute zone, the proximal entry, you have to wait. There is no other option. Hope you got the clarity. But anyway, we missed a very good trade today. Otherwise, it would have been a super profit for us. Okay, this is the Laurus Lab and the remaining two. One is Jubilant Food. We didn't get a trade. This is a daily high liquidity zone. And Jubilant Food, already I explained how I fine-tuned. This is not a new zone. This is the old zone, but today it is listed again. Previously, maybe in this candle, maybe on 8th October, maybe I might have explained you how I fine-tuned. I'm thinking probably 8th October. This is 8th October. Oh, no. 9th October, I might have explained. 8th October, it closed near to the zone, right? So if that is the case, 9th October analysis video, I might have explained. So that's why I'm skipping this, because already we spent a lot of time on this video. And last one is ONGC. ONGC is a new zone. Let me explain how I fine-tuned. Rally, base, rally. This is a daily zone. Rally, 4 base candles rally. I fine-tuned with 75 minutes time frame. In the 75 minutes time frame, this is a drop, 1, 2, 3, 4 base candles and a rally. Generally, when candles are moving up, many times lower time frames, the zone structures won't be good and the zones will be leads to violation of the zone. But here we got a structure, luckily. The 15 minutes time frame, we have a fine-tuned 15 minutes area. We have a very good 15 minute structure. See here you have a drop, base, rally. Excellent 15 minute zone. Within this 15 minute zone, the 5 minutes, so fine-tuned 5 minute zone. So at the distal line, we have a fine-tuned 5 minute zone. This is the distal line of the zone. Here you see drop, base, rally. This is a drop, base, rally. This is the 5 minute zone, is the origin for this 15 minute zone. Maybe this zone might be having a strong order flow. That way next time when we can plan a trade in this area, once prices enter. You may ask a question, can't we consider rally, base, rally? No, I am considering this as a medium size leg candle. The reason is, by these candles, see, this is a very big candles. These candles actually disturbing the structure of these candles. The visual representation. Just hide the candles. Now you get clarity. See? It's a rally candle. This is a medium size candle. So you can't keep this candle as part of the zone. So that's why whenever I see very, very large candles compared to the earlier candles, I will try to hide them so that I see the real structure of the remaining candles. This is the problem with the visual representation of the softwares. We have to live with that, no other option. Because these big candles, to accommodate these big candles, the scaling will be adjusted in the software development. That way the earlier candles will become a small candles. That's why we get a lot of confusion. See, these candles, do you think this is a zone? No, you think this is a medium size candle. All these are all small candles. That way you feel. The moment you hide, you see, all of a sudden you accept, okay, this is a drop base rally. Okay, fine. See, all of a sudden how our interpretation is changed. So that's why you should be very careful. When there are very large candles are there on the chart, try to hide them as much possible as possible. Everything, every time may not be possible, but try your best. Anyway, this is the good zone. It is a lower time frame zone as an horizon to this 15 minutes fine-tuned zone. Okay, these are all the high liquidity zones identified in the previous report, and also we got a very good trades, and one very good trade we narrowly missed. Hope this information is useful to you. Let's all meet again in our next video. Thank you.